Inflation, we are all feeling the strain of it at the moment. When we do our weekly shop at the supermarket, when we fill up our car, it's all costing us so much more. Now, earlier this week, the US released their latest inflation figures, and they went up over 9%, which is a 4-decade high. And if we look at the longer term history, because quite often I get asked, is it peaking? It can't go much higher. It's going to reverse from here. Well, if you look at this chart, then you can see that actually way back in the 40s, 50s, it was considerably higher. So the bad news is there's still, upside to go. And then again, if we look at interest rates, it's a very similar story. When that inflation's high, those governments will look to control that with pushing up those interest rates, putting the pressure on those markets. Again, if we looked at the US very quickly, again, unfortunately, it's got a long way still to go to that upside. And if we looked at, say, just the UK, for example, it's exactly the same story. There is still plenty of upside. Interest rate move less. Not many of you have experienced high interest rates. I'm old enough to remember the 70s and 80s when they were significantly higher. So it's not over yet. It's very difficult to tell where inflation is going next, but I'm here to help guide you through the mess, because there's a commodity out there that is a very good barometer for trying to get a grasp of where inflation is going next, and we are going to take a quick look at that now. So what is that commodity in question that we all need to be looking at to be trying to guess where that inflation is going next? Well, it is lumber, and the chart in front of you here is a monthly chart for lumber futures. It goes back to 2009, so plenty of data. That's the candlestick chart you can see there, and behind that, the blue line is the inflation rate, and as you can see, recently just gone past 9, and the shaded area is a 2 standard deviation regression band showing you where the price normally behaves in, and it's highlighting the real massive increase in the price from sort of mid 2020, up nearly 300% before we've seen it pulling off dramatically, then spiking up again a second time, and then pulling back again nearly 61% from those record highs. So why are we exactly interested in lumber? Well, first of all, you can sort of see a correlation there between inflation and lumber per se, but it's not a like-for-like correlation, and it's not that we're actually looking at the moment. It's a useful guide, but the better guide is that unusual price activity kicking off, like I say, mid 2020 and then running all the way up. Now, you got to think what lumber is used for: construction, home improvements, that sort of thing. Those companies who sell those products will be buying up the lumber in anticipation of a growth in the market there, which would imply that the economy as such is also very strong, and there's that spare capital to put in towards, say, home improvements, that sort of thing. So it's a very good barometer for gauging the feel for the economic situation at that time. And as we can see, the price ramped up massively, and because of that, it was really flagging an early warning to us all that inflation was or more likely to be hitting us hard in the very, very near future. Now, the reason the price then starts coming off and how we sort of translate that into our analysis is, well, those futures traders are dumping out their trades, selling off, and that's because they're starting to fear that interest rates, because we know that interest rates and inflation go hand in hand, that when that inflation and that vast increase we've seen there in the lumber price, which has given us our proxy, so it kicks in, then they know that the government is going to raise interest rates, and then that will affect supply and demand, and obviously put a controlling element over the growth of that market, because it has to control the prices. So that's why we saw the pullback, and then we've got that secondary spike and a very similar pullback again, like I say, 61% from those highs. So it's a really interesting point where we're at the moment, because lumber's a very seasonal product where traditionally it goes up in the fall and winter time. That's when most people do their projects for the homes, and obviously this is also going to relate into the housing market as a whole as well. So normally we see the price go up the fall winter time. So studying the price and its behavior in the next few months is going to be crucial to see where that inflation, interest rates head next, because you'd be expecting the chart to be looking more bullish, but if it's not, that could be another warning sign. We're also looking for, if that price does move up, then maybe people are saying, well, actually, interest rate, inflation, we're quite happy with the economic situation. It's better than what we think, and we start to feel a bit more positive, and that could be the turning point for inflation to come down. So lumber, a very good barometer for the contraction expansion of an economy. In this instance, the US. This can work over global markets. There are other commodities you can use, but this is a good leading indicator because of the way it moves into so much of that basket that creates the inflation numbers, especially in the US. So like I say, keep a very close eye on the lumber prices over the next few months and see where they're heading, because it's going to hopefully tell us a picture of whether it's going to turn good or bad over the coming short time. So there you go, lumber. Keep an eye on it over those coming weeks and months. It could be pointing us in the next direction of interest rates and inflation. So let me know what you think in those comments below, and if you like today's video, please give us a thumbs up. Don't forget to hit the subscribe and bell buttons, and all that's left for me to say is thanks for watching, good luck with the trading, and I'll see you in the next video.